This is your forum. I'm keen to sort of engage with you. You might have better questions because you all are investors. So I hope you will use the Q&A time to sort of raise some of the questions. What I'll do is I'll ask a round of questions to the panel, and then maybe I'll sort of in between open it up so we have some audience feedback on the subjects that we just discussed. Chathuranga, excellent. Thanks for that clarity in terms of where we are and where we like to head. A common perception is that yes, things have stabilized, things are growing. We haven't seen the investments, the FDIs that would, yes, we have the best macroeconomic fundamentals ever, but we haven't seen a corresponding rise in FDIs. How would you explain that situation?
There are a few things. I think if you really look at the FDI's trajectory, we have never been strong. So we, on average, we've got about 800 million USDs per annum, like on average. So there are a few things why FDIs don't come to Sri Lanka. So until we fix this, FDIs won't come. So number one is the political stability that we continue to have. Now we have it. So they are watching it. And I think top it up with the credit rating increase, we will get a great visibility to the country. The second piece was that Sri Lanka did not really connect to the globe. So as a small country, the only way to grow is that you integrate with the local, close by markets, which is India, East Asia, So we've never did those changes, reforms for FDIs to come and set up here. For example, I'm just giving a very simple example. The current tariff policy is going to get rid of para-tariff and make imported raw material very less taxed. And that will allow competitiveness in exports. So if you really did that 20 years ago, we would have had the boom in export. So FDIs would come to those kind of countries to set up. And the other piece is the policies and the governance. Now, if you really take Sri Lanka was at about, I think, the bottom quartile of the corruption index. And ease of doing index, I think we were at 99th place or something, right? So how would FDIs come? FDIs won't come to a country like that. So slowly we are changing the structural reforms that I was mentioning. So I think compared to 2024, we are getting a momentum. But for us to get to where we are, we need to have absolute clarity beyond the act that we have brought in for Investment Promotion Act, which is very clear. But then we have to have a very good land policy. How an investor would get a land, what kind of investments you would invest, what kind of support the government will give, and how fast it's going to happen, and how many markets that you can access out of Sri Lanka. So even though we have enormous potential in various sectors, FDIs did not look at Sri Lanka because we were not globally connected and our government policies and processes were not so sound. I think with those things coming to play, we would see a similar interest like what Vietnam or Middle East or South Korea got when they did their transformations. So we are very hopeful. So you wouldn't see a high growth like the stock market after the election, but you would see a gradual growth in FDIs. Just to give you some glimpse of it, so our funnel is very big. Even now, for the last year, we have got a lot of inquiries. 1.9 billion worth of agreements have been signed at the BOI. And the port city has also got about a 3.9 billion worth of a funnel. So out of that, 1.2 billion is crystallized for 2026. So there is still momentum, and with more confidence coming in as politicians, as long as we don't intervene in the process, I think there will be more confidence. So if you really look at the historical evidence that we see, I've been in the ministry for 1.5 years, many investors have told me how tough it was to get things done, and that they had to meet the minister or the relevant minister, and that discussions ended with very unhealthy demands. So most of them are happy now when they are coming and talking to us. We continue to tell them not to meet us, but go through the process. If the process is stuck, we will step in to help them. So I think these changes, both politically and policy wise, will bring FDIs to Sri Lanka going forward.
Excellent, thank you. Just to ensure that this momentum is sort of persisted with, and there is delivery of 5% growth, you mentioned that you all were continuing with the reform effort. Good to know that the business registration is being amended. One of the bottlenecks is the old customs law. Any progress on that?
Yeah, I think customs will go through a reform. So not only customs, I think most of the some are running on ordinances, some are running on old acts. All these will either made amended, or some will have to repeal. So I think I don't have enough detail to talk about the Customs Act, but the customs is going through a reform, a huge digital transformation, a process transformation. So that's why we are seeing a lot of improvement in revenue collection, but the real requirement is as we get the single window for trade, and customs will be a big part of it. So I think the changes that are expected by the industry is not only in discussion, but being executed in some form. So it's a matter of time. So I think EDB chairman can also add to it. Reforms are on process, but unfortunately some of these changes are not visible until it's done. So a lot of changes, lot of discussion, lot of adjustments are taking place even as we speak.
Thanks. Mangala, I'll move on to you. Maybe you can also expand on what Deputy Minister mentioned on the customs side, but there is this export development plan for 2030, which envisages about 36 billion worth of exports. From what sectors are you envisaging lead up to this such a large figure? And in terms of are there any ongoing measures to really get those sectors aligned to this growth target?
So thank you, Nisthar. And also, first of all, I want to thank Rohan, Chairman Kisiri, and the LOLC group also inviting EDB to part of this panel. And also, I am also very much proud that I am also representing the group as well. So basically, when you look into the export diversification, first of all, I think for the investor side, you are very much keen to learn about what is the Export Development Board. So therefore, I will just explain about the EDB, then I will go to your question, Nisthar. Basically, EDB is the premier organization promoting and developing the export sector in Sri Lanka. So we are from 1979, that means last 46 years. So we are developing the export sector in Sri Lanka. So we have our primary goal, mainly basically scope based on the policy advisor role to the government, mainly for the export sector. And we have to promote our export. Then we have to give them relevant knowledge service. Then we have to monitor the export sector in Sri Lanka. Based on that, we have been working with the many stakeholders. So currently, we are under the Ministry of Industries. So under the Ministry of Industry, Minister, Deputy Minister and Secretary. So we are working toward the 26 billion export revenue by 2030. So basically EDB, so we have to work with the 360-degree institution, mainly not only the Sri Lanka. So we have to work with all the foreign missions in overseas, foreign missions in Sri Lanka, all the ministries, all the finance organization, diplomatic organization, so all the district secretary, divisional secretary. So likewise, we have been working all the 360 stakeholders. So when you come to your thing, now when you look into Sri Lanka export performance in last year, so we were able to reach 17.3 billion export revenue, as Deputy Minister explained. So that means merchandising export sector, we have reached 13.5 billion export revenue. and the services sector 3.7 billion, together that 17.3 billion. So compare with last 10 years, for information as investors you would like to know, because when you look into Sri Lanka CSE, there are 289 listed companies available. So out of that, 40 to 60 companies, that means more than 20 to 25% representing export-oriented listed companies are here. So when you look into last 10 years export data, so we have seen that nearly 1 to 2% export growth is there, for your information. In 2015, our export revenue was almost 13.98 billion. So when you come to the 2017, you can see the same figure, 15 billion. And we are coming to the 2023, we can see the export revenue was 15 billion. So that means during last 10 years time period, we are in the level of 14 to 15 billion export revenue. So that the government target to bring this 14 to 15 billion to 36 billion. So then you can see that how the EDBs, how the Sri Lanka export sector is going to 36 billion means from this year onward, so you have to generate more than 10 to 12% export growth. So as Minister clearly mentioned that last year we reached 6% growth. So this year, so already we have reached 13.7% from the January export data, 1.5 billion already we reached. From the merchandise and service sector, both sectors we have reached more than almost 10 to 12% growth. So when you are planning to 36 billion export revenue, so definitely we need to diversify export. So that is why EDBs, we are concerned about the new export development plan. So the National Export Development Plan is a strategic initiative strengthening Sri Lanka's export competitiveness and sustainable economic growth. So based on that, we have 3 key objectives with the new plan. One thing is enhancing Sri Lanka's trade competitiveness, expanding our regional and global market linkage, and promoting sustainable economic growth. So those are the key objectives we are expecting with the National Export Development Plan. So with that, during last 8-9 month time period, we have been working with the Sri Lankan export community, export association, ministries together, support of the Asian Development Bank. And now we are in the final stage of the National Export Development Plan. Hopefully by April we will be able to launch this. So with the National Export Development Plan, our target is to diversify product diversification as well as market diversification. So mainly target is to get the share of export sector from the total GDP from 19% to 25% by 2030. So right now we are in the level of 19%. And also SME sector contribution, also we want to get the to the 25% by 2030. So right now we are in the level of 8%. So with that we have identified new sectors. So mainly for the product diversification beyond our traditional export, mean that mainly for the apparel, tea, rubber, coconut, we are going to go ahead with the new sectors like auto component, very much sectors we have identified with the global market. So we are having the very much potential. So then we are going for a mineral-based expansion, the new value addition expansion, that is a new sector we have identified, electrical electronics, and the food and beverage, and the Sri Lankan spices, gem and jewelry. Then those sectors will be the priority sectors we are identified for the next 5 years, while we are further expanding of existing sectors. So those sectors we are expecting very much remarkable percentage coming next years. To get that 10 to 12% growth, definitely we need the market diversification. So that is why other option is the market diversification. So we are going for a market diversification. Everyone knows that Sri Lanka, our export, 25% going to the USA market. So other 23% going to the EU market. So when I went through your percentage, we can see that last April, stock market came down to the very low level. Because of that, we know that ECS is a very much volatility market. If there is something, we can see that very much red colors from the stock market. Reaction is very much fast. Your reaction to the export CSC. So last year, 25% represent from the CSC market. I'm sorry, USA market. So therefore, we want to diversify our export into the other market. So we have seen very much potential for the African, ASEAN and Middle East countries. So then we are diversifying those countries as well. So when you look into the last year export performance, we can see that African region more than 46% growth, Middle East region more than 25% growth, even ASEAN countries too. So therefore, if we want to diversify to the other market region, therefore there is a FTAs is very much important. So Sri Lanka, so we are right now we are having the FTAs. I think still our private sectors, they don't know about this. So that is why this last Monday we had the a CEO forum from the private sector organization who are not in the export market. So leading companies we invited. So most of the companies participated, including LOLC Group 2. So then we explained about the potential of the Sri Lanka, because as Minister clearly mentioned that GDP growth, tourist income growth, our last year FDI we reached 1 billion level. So with the now FTAs, you know the Sri Lanka, India, we have the FTAs, but right now we are not getting the maximum potential. So when we are exporting 1 billion to the India, we are exporting, so we are importing again the 4.3 billion. So Pakistan, Sri Lanka FTA we have. So again we have the APTA and the SAPTA, and the very recently now we are going to be in the final stage for the RSF. So with that, Sri Lanka will be covering more than 15 countries. So EU countries, we have the GSP plus, so that we can export to the EU countries with the zero tariff. And the very recently UK, January 1st onward, UK DCA scheme. So with that we can export to the UK with the zero tariff. So even Australia, it is coming to the 1 to 5% tariff to the Australian market. There are huge potential. And the very recently Japanese, they have signed the agreement with Sri Lanka because they want to come to Sri Lanka. So based on Sri Lanka, they want to export to the Indian market, African market and Middle East. So we have seen that how Japanese companies invested in India. When you look into the last 5 years time period, we can see 45 billion approximately they have invested in India. So when you look into Sri Lankan side, they have invested only 350 million. So Japanese investors, they want to come here, invest here. So based on that, they have to expand. So that is why Sri Lanka now other infrastructure facilities, including FDI plus our BOI zones. Right now we are in the 17 BOI zone. We requested government to establish another 5 to 10 new BOI zones based on the product specific BOI zones. That is also in the pipeline. So this year we can see that the other transformation policy environment, including Minister mentioned about the national tariff policy plus trade national single window. This is one of the key thing we have to initiate. Why the trade national single window is very much important, because we have been discussing this many decades, but this year government already allocated 2.5 billion for the this trade national single window. So already team is working towards this target. So most of the government institutions already now they have implemented this digitalization process. So initially they will digitize the custom. So with that, all the government institutions, including custom, import control division and other key relay institutions will be interconnected. Then as an investor, as an entrepreneur and the exporter, so you will get the relevant approval within a short period of time. So we are dragging this process. So that is the basically idea of the National Export Development Plan. Okay. So with that, Nisthar, this year from onward, we are expecting 10 to 12% export growth is there. So when the next question, I will explain further.
Okay, thanks. Excellent. Asanka, I'll move on to you. I'd like to get because the discussion is more on the macro, the outlook, how it sort of pans out to be. But from your perspective, what is your assessment of the economic outlook for this year and maybe next year as well?
I think the Deputy Minister stole my thunder on that, so I completely... Deputy Minister stole my thunder on that, and I was wondering what to say. I think the reality is when a country runs through a twin deficit, it's asking for trouble. And Sri Lanka is not the only country who has fallen into this trap. If you go to late 1990s, you had a spate of countries in East Asia, including Philippines, who suffered from this. Now what has happened is we are running a twin surplus. Twins, that means a current account surplus and a fiscal surplus. And I don't want to harp on what the Deputy Minister said, but I want to add one layer to this conversation. The macro policies which is leading to these twin surpluses is now legislated. You have the Central Bank Act. You have the Public Finance Management Act. You have the Public Debt Act. And you have the Economic Transformation Act. So that means it's legislated that central bank cannot print money and fund the fiscal deficit. The key fiscal targets are legislated. So the moment you breach the target, it becomes illegal. It's a very, you breach it even slightly, from then on the executive actions become illegal. And the public debt is managed by a separate unit. Now, all these pieces of legislation, you won't find anywhere in any of the frontier Asian economies. You might find one or two of them, but not all of them. So we have a very well-articulated legislative framework through which these prudent macroeconomic policies are driven. So I want to keep to the point and keep it short. So these twin surpluses are likely to be sustainable, and they have been tested through election cycles, and they have also been tested by economic crises like the DITWA. So therefore I fairly remain confident that it will continue, and as long as it continues, the interest rates will remain low, which will actually ensure the real economic activities can grow. And with that, the corporate earnings, and with that, obviously, the equity markets.
Okay, just a question. We did have mid-year fiscal. We had a previous legislation which made government to stick to a 5% deficit, which never happened. Will this be the same thing, though it's not legal? Government will have an excuse going forward.
So it actually boils down to what the society believes in, right? And I think if I remember, when it came to that 5% target, there was a lot of conversation that it's going to restrict the country from achieving growth targets. And I think in a sense, this society and the political leaderships of coming across different parties witness the mistake of not sticking to that. So just like after the Second World War, that few generations remember the atrocities of the war and therefore was committed for global peace, I believe for a while at least, irrespective of political parties, political leadership and the societies may remember the economic crisis and therefore stick to it.
Okay, excellent. Shehan, I'll just continue with the outlook story. I mean, what sort of, how bullish, or what's your own view, and what factors sort of support your view in terms of the economy?
Sure, I think from the equity markets perspective, after the economic crisis and the revival of the economy, we saw continuous economic fundamentals improving, and with that we see the stock markets leading the price adjustment. So we saw 3 years of continuous growth, and we are seeing all-time high stock markets in terms of the market indices. With that, always you come to the conclusion whether the market is high and whether the valuations are too expensive and whether there's a correction due. But as we look at the overall fundamentals and the macro stability, what we see, the stable economic outlook puts the foundation. So though the prices have picked up significantly from the bottoming out, kind of a bottoming out with the economic crisis, still if you look at the underlying earnings growth, we see significant earnings growth. And if you look at the research presentation, if you look at the multiples, price to earning ratios, it has been more or less stable last 5 years. You are price to book value probably has gone up slightly, but the profitability level also parallelly has gone up. So that reflects the companies are leveraging on the macro stability, low inflation, stable external sector. So we see as a stock exchange outlook, we see still, despite the significant growth in terms of pricing, we still see there's an upside because of the stable environment, and probably like what the minister was alluding to, potential credit upgrade. There would be further adjustments for the pricing upside. So we see there's still upside remaining for the market. Yeah.
Thank you. On that note, I'd like to open it up to the audience on just any questions you have in terms of policy direction, the kind of confidence level, or issues that you feel that there is some of the policies are not really addressed. Any questions or interventions from the audience? As I said, I'm very keen to sort of make it interactive. Let's learn from each other. Please raise your hand, and it can be an observation or a quick question. Chathuranga is ever willing to take any question.
I think I explained all, so there's less question.
There is one question here. Yes.
Thanks, and my question is to the Deputy Minister. Just a quick one, because you spoke about the confidence around the growth for this year, and you believe that the growth will still track quite well despite the impact of Ditwa, and you've had about a couple of months to assess the potential fallout from Ditwa for this year as well. So my question's around, immediately after the cyclone, there was a supplementary budget estimate by the government which said that there might be an impact on the primary surplus and you would have to spend extra on reconstruction. What are your views around that? Do you have to probably renegotiate any terms with IMF for the targets for 2026, be it the primary balance, be it the reserve building for this year? And how confident are you in terms of the primary balance continuing? Obviously, I think 2025 was phenomenal. I think it was way above target in terms of what was achieved. How confident are you in terms of this continuing into 2026? Mainly because of the fact that we have a lot more global uncertainty this year and because of the fallout of Ditwa. Thanks.
Yeah, I think the reason for primary surplus to have was that to give a discipline between revenue and expenditure, right? So that was the purpose of having it. And the IMF agreement also has a contingent clause at a time of a crisis. Can the expenditure go beyond 13%? So we've used this. So already, so it's been negotiated. So the 500 billion that we are spending is out of the 1 trillion excess cash that we had. So there is no impact on the 2026 budget. So 2026 expenditure will go, but there will be no impact on the primary balance because it's coming out of the cash that was pushed from 2025. And at the same time, even with the Ditwa reconstructions, we will still stick to the budget which was presented before the crisis. So I think that is the confidence we have. And within the budget, we can handle it with this 500 billion excess funds, and then we are actually collecting additional funds or the Ditwa fund, the rebuilding fund. So at the moment, we don't see any risk of deviating but surpassing. And we are also confident that the revenue targets we will go beyond because it's a very conservative revenue target we have. The changes you are seeing on the legislations that are coming through, like for example, if you're buying a house, buying a vehicle, registering a company, you need to have a TIN, and then you are basically bringing the people who are not part of this tax structure inside the tax structure. So we would see a further growth in the revenue side. So yeah, I mean, we are very confident with that, and let's focus on the 2026 budget. And what we want to do now is, last year we spent about 72% of the capital budget. Even though it's 72%, it's the highest in the past decade. But this year we want to reach close to 90% or more. So that's also going to drive the GDP as well. So 500 billion additionally coming into the GDP, and then another 1.3 trillion coming in as capital expenditure. I think that itself will drive the GDP a notch higher as well. So I think we can be very confident that the government will stick to 2026 budget.
Thank you for that question. Anyone else? Yes, okay. And there are 3 questions, all on the right-hand side of the...
So my question is, one question is to the minister. So in terms of the DITWA-related reconstruction work, in terms of timeline, when do you think the real executions will start? That's for you. And for Mr. Mangala, in terms of the exports, particularly we saw the coconut-based exports had done quite well. So for my understanding, in terms of DITWA, were there any destruction to the crop? And how are you seeing the coconut-based export trends this year?
So I'll answer on the timeline. So basically our priorities are on the infrastructure. So so the rail network and the road network is getting prioritized. I think electricity we are fully restored. So it's a few roads we have to do and few rail tracks. Apart from that, we are very much focused on rebuilding houses for people. So we have to now do about 30,000 this year. So whatever that's been damaging the economy in terms of infrastructure, we believe that by end of this year, most of the things will be done. So the delays in the housing construction and all that is due to land issues and MBRO reports not being available. I think those things will be done. But just before Mangala speaks, from Ministry of Industry's side, we didn't see a huge impact on a particular industry per se. The agricultural industry, it's seasonal and everybody has started, all the crops are up and running. So other than the large industries which were by the river banks, there is no significant impact on the GDP. So as a number, we have 256 mid-size factories that's been partially or fully damaged. So we are in the process of rebuilding. The problem is the insurance piece. So government is intervening with those industries with the support of large industries to build them. But from a timeline, I think from the DITWA impact, we would say by 2027, we would be fully recovered, other than the lives that we lost.
I think there's some more questions here. Mang. Oh, sorry. Yeah, sorry, Mang. You can. Sorry, I thought.
So regarding your question regarding the how coconut export impact to the DITWA, basically, Minister also mentioned that now when we did the survey and we already got the information too, nearly 350 exporters impact with the DITWA, but when we went to the in detail, I think very less impact for our sector, because when we are categorizing our exporters in the district wise also, some less impact for our sector. And some impact for the food and beverage plus spices plus coconut based product also. So therefore we can say that 1 to 5% in between impact was there. But when we see the numbers, export numbers for the month of December plus January, even January month export performance from the coconut sector nearly 18%. So last year, that the first time in the history coconut based export we reached nearly 1.2 billion. So compared with the 2024, we can see that more than 22 to 25% growth. So same numbers from the January month also we have seen the good performance. So therefore this year we can see that less impact for the coconut industry. But the demand is huge, because when you are producing 3 billion nuts, Normally we are using the 60% for the domestic and the 40% only for the export expansion. But this formula should be changed because we are having the good demand from the coconut based product. So that is why some of the companies in Sri Lanka, they went to the Indonesia too, because otherwise they are unable to meet the requirement. So hopefully the coconut based product, we should have some other alternative also. Initially we are discussing. So sometime we have to import some of the raw material and the export sector. So we are working towards that target, but there is a huge potential for the coconut based product.
The question is for Deputy Minister. Hi. It's a specific question regarding the proposed Investment Protection Act. Would you be able to share some color on what the government is planning to address through this act?
Unfortunately, I don't have too much detail to it. It's basically now we have different investment protection acts bilaterally with multiple countries. So this is going to give a holistic view of the investment protection to any investments. So I don't have the details to share at this point. I'm sorry because I didn't see the draft or the bill that is to be come. But generally the idea is to ensure that apart from the Investment Promotion Act, coupled with the Investment Protection Act, so that the policy changes of government will not, the consequences of policy changes will be looked at for the investments which are coming in, because traditionally unless you had an Investment Protection Act with that country, the government policy changes were not really looked into, and the investor had to bear that. So that is the big piece about it. And the other piece is the protection that legally a company would have beyond a BOI company. Now currently there's a way that the BOI companies are looked after, but apart from BOI companies, other companies are not covered. So these are the two things mainly, but I wouldn't be able to share more than that.
Yeah. My question is also to the Deputy Minister. Sri Lankan Airlines has been a huge burden to Sri Lankan government and to the Sri Lankans, all the Sri Lankans as a whole. So how this problem, so it's slowing down Sri Lanka's prosperity and growth. So what is your view on how this problem should be solved, and what is the, how government is poised to solve this problem?
So I think Sri Lankan Airlines, our policy and our need is to have a national carrier. So we are not deviating from that. So we are doing our utmost best to recover Sri Lankan Airlines. So the team has given a 3-year plan, and the government has given a kind of a cushion, 100 billion rupees to revive over a period of time. So there's been debt being taken over. So we are looking at the operational performance of the Sri Lankan Airlines, because asset is at this point it's very much undervalued. Even we go for a investment partnership, last time it didn't crystallize. So what we are trying to do is now to make it better operationally, make it better financially, and probably for expansion purposes we might have to go for a partnership. But we are not willing to lose the brand. This is the only thing that we have as island nation, and this is the only flight that has direct flights to certain locations even today. Because Sri Lankan Airlines is flying directly, we have some level of connectivity. So we don't want to lose our slots in the world and compromise the national carrier. So we are looking, even though we look for a partner, that would be a partner mostly a financial and operational end, to ensure that we can carry the brand and the tourism support that we are giving. So it's a very strong negotiation. But for us to negotiate strongly, we need to get the operations stronger. So that's the government's current strategy, and we hope it will work. If it doesn't work, we will have to call the shots. But I think the whole strategy of the government is to have Sri Lankan as a national carrier.
Yes.
Thank you. This question is referred to the Deputy Minister, Honorable Minister. With global oil prices and shipping costs rising again due to tension in the Middle East, how is the government planning to protect the cost of the living of the nation and the rupee stability without sticking on to high-cost borrowings? And based on your remarks, I would like to hear something from Asanka also. Thank you.
Right, so I think this is an inevitable situation. So the oil prices generally shoot up when there's something happens in the Middle East. So at this point, we don't have any lever to discount, and that is a policy that we have moved out of it. So everything will be cost reflective. As a society, as a country, we will have to bear it, and it will put pressure on exports because of export competitiveness, but that will be felt across. So I think we would see a spike in inflation, and since we are still below the target, so we are pushing the central bank to bring inflation to 5%, and we are still at 2% or less. So I think the fuel prices play a huge, because the reality we all need to understand, even we talk about inflation, the Sri Lankan inflation is mostly supply side. It's not a demand side driven inflation. The central bank has one tool to manage, that is the interest rate. So they have brought it down as much as they can, but the inflation is not picking up because inflation is, in Sri Lankan inflation is highly planned for, highly pushed through the supply side, mostly fuel prices. So as you correctly said, this will push up, but we don't see it will have a drastic impact on the inflation target. So maybe it will hover around 5 to 6%. So we have to, I think the president also mentioned that the central bank has given 3 scenarios yesterday. We are yet to see that report. So, but as a whole society, we might have to take the brunt of this, short-term shock, because the energy will be cost reflective, electricity will be cost reflective, and we don't want to deviate and go through the route of what other governments did. And just want to clear, the policy is this, right? We will not allow CEB or petroleum to give discounts. That's the basis. If certain communities having hardships, government will give direct incentives to those sectors. For example, if we can figure out some cash from our extra collection and we can support the fisheries industry, we will do that. If we feel the prices are too high on a particular sector for a particular community that deprive them of consumption, we will support them. We will not give subsidies through the institutions. So that's the base of it. That is where we fell off. So I think that is a strategy. So if things go beyond our control, in terms we don't know what's going to happen, so government will relook at its expenditure. So that is the only thing that we can do, because we have planned huge capital expenditure for this year. So obviously we will have to reallocate for operational. So I think that is to ensure people are comfortable. So government will take those decisions based on the variables that move. But policy is very clear. How we take decisions are very transparent.
Asanka, you like to just quick response?
This also goes back to.
Yeah.
So this actually goes back to a question you earlier asked, the 5% budget deficit, the fact that we veered away from it a while ago, will it happen? So, I mean, going back to the Deputy Minister's comments, as an investor, there are 2 key variables I will always watch: the fiscal deficit or the primary surplus and the current account surplus. So essentially what we are hearing from the government is, even if the crude oil prices go up, they will stick to the prudent policy of ensuring this cost reflective pricing. And when the cost reflective pricing happens, none of the state-owned the 2 key state-owned enterprises will not suffer losses. It will not expand the fiscal deficit. that means the government will continue to stay away from the credit market. And when the government continue to stay away from the credit market, interest rates will remain low. And when the interest rates remain low, it allows the real economic activities to pick up. So while that inflation caused by the supply shocks will have some impact on corporate earnings, some impact on the disposable income, when the supply shock goes away, we'll be able to revert to the normalized levels much faster. If you veer away from it, you actually build up public debt. It's a lot more tougher to unwind that public debt. So for me, hearing the fact that we will not move away from cost reflective pricing is the biggest positive in terms of economic outlook for the country. And also I want to add one last thing on the crude oil price. See, if crude oil prices stays at $100 this time, it's not a sustainable equilibrium. Usually when it goes to $100, the Middle Eastern countries do well. But this time it will touch $100 without Middle Eastern countries being able to produce. So Middle Eastern countries survive on crude oil, tourism and logistics. Then you have the US economy. President Trump is heading into midterm elections. He cannot afford higher pump prices as much as us. So this $100 or above crude oil prices, logically thinking, is not a sustainable equilibrium. It can go above, it may go above, but the game theory suggests something has to give in for it to come down.
Just to quickly add, I think the fuel prices are more impacting the Western economy than us. So they are not going to risk this. That is why you see Trump himself saying on the Hormuz trade that they will give protection to tankers, because they know if the oil prices shoot up, the problem is not Iran, problem is US itself. So I think we have some level of leeway, and I think we should not be naive. We are ready for it, but as the President clearly said, we hope for the best, but we are ready for the worst.
Thank you. Yes, there is one.
Will mitigating this current problem, will it have any impact on Ditwa rebuilding, or will we have to think of it?
No, I think the current situation, if at all, is going to impact Mr. Mangala. That's our exports. And we will have a higher import bill. So it will play on the reserves. Nothing is going to come to the fiscal side. I mean, to be really, so there is a component of imports in the rebuilding. So that will also go up. So what we can say is, if it really shoots up and get worse, probably 10 to 20% of the rebuilding will have to push to the next year. That is it, because, but what I'm still affirming you is that we will stick to the budget. So if we really want to cut certain expenditure which we have planned, but the priority is the Ditwa rebuilding, we will do that. So government has the ability to, reprioritize the expenditure in 2026 budget. So that's what I'm saying. So if something goes short somewhere, we still have the framework to readjust and not to borrow beyond what we have planned. Not to trouble the debt market, so that again now interest rates will shoot up. So I think those are the two fundamental variables, again as was mentioned, that we will look into. So yes, there will be impacts, but we have the room to manage.
In addition to that, 1 minute takes regarding the impact for the export sector, Middle East crisis. Middle East represent from the total export
6%. 6%. Out of 6% even mainly for the tea export. For example, now last year we exported nearly 1.5 billion worth of tea export, and the Middle East region they represent nearly 530 million, 35%. So that means that impact may come for the month of March or April based on this whole situation, but not for the other product. So that is why this month also we are expecting nearly month of February anyway no impact. There will be another 10 to 12% growth should be there. For the month of March, we are expecting nearly 10 to 12% growth, but with this situation, sometime there may be an impact for the in between 1 to 4%. Right now we can't say because of only the 2 days, 6th of March, we'll see the situation. Mainly impact for the tea industry.
Okay, thank you. That was excellent. I have a sort of wrap it up because we're behind time. Quick questions and also quick answers in terms of responses. Chathuranga, just one question. I know you spoke about reforms, you mentioned about education, energy and all that, but we have seen in recent months that there is resistance from the employee side. People thought NPP coming will ensure trade unions will be silent and supportive, but energy, healthcare, education, I think there will be some more coming up. How are you managing that challenge?
Politics. So basically, it's about people. So what we are posing is a transparent process of transformation. And thus far, each of the ministers has been able to communicate what we are going to do and how we are going to do and how it's going to benefit to its employees. And thus far, we've been able to manage. But we would see resistance from pockets of resistance coming from two sides. One are people who don't want to change. So for example, when there's so much of corruption in a particular area, that team will resist digital transformation, right? So that is given. And when there's political influence that is not from our party but from opposition, they will also make a noise because it's politically beneficial to kind of rattle the government. But what we are seeing is none of these reforms are brought in by the government because we have already given a policy book. We are not doing anything beyond that. So that policy book has been written and mandated by 70% of the people. So we are going to go for the change. And I'll give you one simple example. There was so much resistance at the, this is a classic example, use case. Sri Lanka Post, that they don't want to put the fingerprint. What was the expectation? That the unions will strike, opposition will come to street, and that we won't be able to get the fingerprint thing done. Now what has happened? Fingerprint is done, and huge investments going into the reforming of, betterment of the institution. So this is a give and take. And another strategy we basically used is, some of the smaller corruptions are due to government servants or public services not paid well. So now we have given a foreseeable 4-year increment. So every year there is an increment. So it's a give and take. So I think our party has that ability to, be more empathetic and listen to people and to understand their pains, and I think majority of Sri Lankans are good. So therefore, we would see that these reforms are going to we will be able to do. There will be resistance. We don't say no, but we are very firm on what we want to do.
Okay, thanks. I'll wrap up with Asanka. We had 40% growth in the last two back-to-back 40% plus gains. What you think is the bull run over, or 2026 will continue to be the roller coaster third year?
I mean, this can be a long discussion, but I'll keep it very short. But if I look at our coverage universe, or our investable coverage, we look at business volumes. I think in almost most of the industries, volumes have merely gone back to what it was in 2017. So really, that, you know, what we missed out because of the crisis, the growth, or the structural growth that should come through is yet to be reflected on the earnings. When a country goes through a period of hyperinflation and recover, the market capitalization has to go up because inflation alone drives the earnings. In reality, the business volumes haven't really grown. So while I don't like to predict the index movement, I think there will be sufficient number of companies which are likely to report about 20 to 25% earnings growth over the next 12 months, where the investors can position themselves to have a strong portfolio of strong equity returns. I think that is my response to that.
Can I add just a quick one? I think if you really look at year-on-year growth, if somebody is expecting a 40% growth next year, you are a short-term investor. But what my request is to invest in the long run, because as you correctly said, we are not reflecting the earnings, and obviously the growth trajectory for each sector is high in the longer term, next 5 to 10 years. So if somebody is really looking at to gain, I think your gain is going to come over a period of time. And if you really take the construction sector, which was down, and government itself is, pushing out 1.2 trillion turnover to that sector itself, right? So if you, I'm not picking a sector here, but at the same time, tourism is going to do the same, and the agri-exports are going to grow more than 20%. But the adjustments will take place over a period of time in the stock market. So if you really want to look at whether 40 will come, I don't think that is how we should look at it. We should look at it from the perspective of the country is going to grow, and are you going to take the advantage of that growth through the stock market. I think that is how that need to be looked at.
Excellent. So thank you very much for the expert panel. They're very frank, I would say. Free advice, obviously, and it's like the focus is on the economic upswing, and there is hope of sustainable growth. 5% plus is fairly positive from a base of 5%, and I think as the panel said, there are a lot of opportunities, both short and medium term. So thank you very much, and over to the and also thank you for the audience for making it interactive.
Thank you, gentlemen. Ladies and gentlemen, we will now proceed with the presentation of tokens of appreciation. So it would be great if our panelists as well as our moderator could remain on stage. May I now invite Mr. Kitsiri Gunawardena, Director of LOLC Securities, to present these tokens of appreciation this evening. First, Honorable Chathuranga Abeysinghe, Deputy Minister of Industry and Entrepreneurship Development. Now, Mr. Mangala Wijesinghe, Chairman and Chief Executive Officer of the Export Development Board of Sri Lanka. Next, Mr. Asanka Herath, Chief Executive Officer, Unit Trusts and Head of Equities at Lynear Wealth Management. We were also joined this evening by Mr. Shehan Bartholomeusz, Chief Executive Officer of LOLC Securities. And of course, our moderator for this evening, Mr. Nisthar Cassim, Chief Executive Officer and Editor at Daily FT. Thank you, Mr. Gunawardena, and thank you, gentlemen.